Amazon CEO Andy Jassy on Squawk this morning talking about the state of the consumer on the heels of the company's annual shareholder letter. That's where we'll start with Truist Securities' Youssef Squali, who has a buy rating on the name and a target of 144, Youssef. Wow. What gets us there?
Well, a few things. So just piggybacking on what Andy was just talking about in terms of the consumer remains pretty healthy. And our intra-quarter checks leveraging some of our proprietary credit data or card data would suggest that, the quarter has tracked pretty well, even at higher end or even slightly higher than expectations. You add to that the fact that they've laid off about 27,000 employees, which we estimate will save them somewhere between $3 and $5 billion. And that, remember, on the back of them doing maybe $12 billion in operating income last year, right? So I think all these indicate that, the fundamentals of the business remain really strong. The one caveat is that the cloud business is definitely slowing down. We've seen it throughout last year, started up 37% and ended up 20%. We think it's going to drop somewhere in the low teens. That's really what what gives pause to some of the bulls. But overall, we think the fundamentals are really strong. And even in a year like this, we still expect the company overall to grow 10% or close to it with material improvement in margins.
But AWS is the profit engine of the company, is it not? I mean, I know it's running an $85 billion revenue run rate. It's an enormous business, still growing. But when they say short-term headwinds, shouldn't that concern people?
Oh, it does. It does. And honestly, I think that's probably why the stock has, up until now, in the trailing 12 months, it's down somewhere in the 34, 35%. Our internet index is only down about 24%. So I would argue that that's already something that's baked into the stock at the current levels.
So it doesn't sound like you think their reduction in force needs to equate, say, Meta's on a percentage basis.
No, because, the two workforces are quite different, right? Amazon has over 1 million employees. The vast majority of those are in, distribution centers and whatnot. But I think if you just look at the office potential, the percentage of office workers that have been removed from Amazon relative to Meta, then I think you're probably looking at something that's comparable.
Youssef, you're talking about, with your price target at least, adding over $400 billion in market value to this company. Is it just going to be executing properly, or is there something else that's part of that target that's going to happen here to get that accretion?
Yeah, honestly, it's going to be execution first and foremost. That said, they are doing some really interesting things around new initiatives that could add, billions and billions of dollars. Like, for instance, yesterday we published a deep dive on a new initiative they launched last year called Buy with Prime, which we estimate by 2026, literally within the next 3 years, should add an additional $10 billion to revenues and dramatically improve the capacity or the efficiency of their delivery. And that's effectively allowing third-party merchants that are not on the Amazon platform today, and that's like 50% plus of the market for online commerce, to have an opportunity to offer the Prime promise. That's something that, it's going to be really hard for other platforms to compete against.
Youssef, we'll see quite a letter and quite an interview this morning. Obviously, stock's getting a little love here at the Open. Appreciate it. Youssef Squali on Amazon today.